payroll. One of the things that we're going to have to go back and do a backtrack on is amortization of the notes payable or the bonds payable. But see if we just what is amortization of bonds payable? Oh, okay. So like it's like not necessarily depreciation or like amortization. It is amortization, but it's more about the discount or the premium being divided evenly across the entire interest period. So like if you calculated that discount or if you've calculated that premium, that premium is going to be amortized across the entire lifetime of the bond itself. So then there will be a accumulated amortization. And eventually that interest expense will be closed out at the end of the lifetime of the bond. Okay? We'll like do an example of that later. I'm gonna go back and like do like certain little things, talk about things like more in detail. But let's talk about payroll. So payroll liabilities, which is the amount paid to the employees for services that they've provided. Liabilities, if you guys think about liabilities in the context of like limited liability, it's like making you think like if you did something wrong, right? Then, for example, you could be on the hook for it, like personal liability. But like in this context, liability really means like the amount that is to be owed, kind of like a credit that would have to be payable, pretty much. So things to know about liabilities when it comes to payroll liabilities is the gross pay and then the net pay. So like gross is like the total amount of pay, and then net is like gonna be the pay after deductions, because there's gonna be a lot of different types of deductions when it comes to payroll. In particular, there'll be FICA, Social Security, Medicare, and FUTA, as well as SUTA, and employment compensation. So let's try this example set real quick. Lindsay Vader's weekly gross earnings for the week ended March 9th were $1,200. Weekly gross pay earnings. $1,200. Federal income tax withholdings, $193.44. Now, assuming that the Social Security tax rate is 6%, Medicare tax 1.5%, Social Security tax 6%, and Medicare tax at 1.5%. What is Lindsay's net pay? So 1,200 times 0.06, $72. Social Security tax. Medicare 1,200 times 0.015, $18. So that means that the net pay, which is going to be gross minus deductions, equals net pay. Total amount of deductions $193.44 plus $72 plus $18. So total amount of deductions. Deductions will be $283.44. So $1,200 minus $283.44. Net pay will be $916.56. Let's just double check real quick. And 6% Social Security tax and 1.5% Medicare tax. What is the That's strange. Well, this is an example of when you guys shouldn't necessarily follow the AI exactly, because the AI could be wrong sometimes. Okay. Generalizing. Well, when you guys journalize this stuff, you guys have to remember that some things like self-employment tax, certain kinds of taxes will have to be paid by both the employer and the employee. So when creating the payroll payable, you guys should make note of that. I'll go into more detail in a minute, but let's try this example set. Payroll register indicates 4,800 of Social Security withheld, 1,200 of Medicare withheld, and salaries of 80,000. Okay, so salary of 80,000. Social Security 4,800 withheld, Medicare 1,200. Federal withholdings 72540, and retirement savings 3,200. So let's journalize the payroll period. Sorry, I'm kind of sleepy. So salaries, debit. 80,000. Federal income tax payable. It doesn't say anything about state, but normally there would be state as well. Social Security, tax payable. $4,800. Medicare, 1,200, and contribution, 3,200. So just based off of this here, 80,000 minus 2,670. The net pay as in like the salary after deductions. Salary expense after deductions would be $53,260. Payroll Register of Heritage Co. indicates salaries total of 80,000. So it's expense 80,000. Social Security 4,800. Medicare tax 1,200. And then earnings up to 14,000 are subject to state and federal unemployment tax rate of 3%, 5.4% state. So federal Well, according to this, it's saying earnings of 14,000. So 14,000 times the federal rate. Right. $112. State. $756. So the journal entry would look like this. Big count, debit, and credit. Count, salaries, debit of 80,000. Social Security. Social Security tax payable. it Social Security tax payable or? I guess it's like the same. I thought there was like some differences to it. 4,800. Medicare, 400. Federal employment. $756. So that'll be $6,868. Minus $6,400. So that would mean the net pay after these deductions would be $73,132. So then, after like these expenses are tax payable, salaries payable. So then it becomes like after that. So like your salaries payable, right? That's the expense, but the payable is going to be the remaining amount. So then that amount, payroll tax expense, 1,500. Payroll tax expense. So like later on when these salaries get paid out, pretty much, comes out the cash. Well, probably 80,000. Well, I mean, so like for example, these would be credited, close out the accounts. For example, Social Security, tax payable, on the day of Social Security payable, 4,800, Medicare, 1,200, federal employment tax, 2, state employment tax, 6, and salaries payable. This would close out the accounts, and the money would come out cash.